trade agreement. I'm joined by Hendrischke. He's a professor of business and management at the University of Sydney Business School. Thank you so much for joining us.
Hello.
I'd like to first get your reaction to this trade deal, a decade in the making, the most extensive China has ever signed with another country. What does it mean for both China and Australia?
Well, it's not quite right to say it's been a decade in the making. It has been a trade agreement has been negotiated for over 10 years, but it was the last few years when the new government came in that the decision was made to go for a practical free trade agreement. That is, they had specific targets. They wanted agriculture in there, they wanted services in there, and that has been achieved. And it's a great success because it opened more markets than anybody would have expected.
Well, there hasn't been an exact figure attached to this deal. There are reports putting it in the $20 billion range. What would you put it at?
The $20 billion range is an old figure. That dates back something like 10 years when the first calculations were made what the reduction of tariffs could bring. At that time, it was 18 billion Australian dollars. In the meantime, over these 10 years, trade volume with China has increased a large amount, so the volume will be much higher. But nobody has at the moment put a practical figure into it, because what is happening is that the Chinese market is changing. We are moving into a new market, both in agriculture, where there is more consumer demand on the Chinese side, unprecedented, which we had not before. And the other big market is services, where a whole new market is opening up with Chinese finance reform. So we do not know how big the market is going to be, because what the trade deal does now is put Australian banks, other service providers in the front line of experimenting and piloting new services for the Chinese consumers. So it's certainly more than the figures we had in mind.
Sure. There has been a little bit of criticism attached to this, though, by some politicians. Australia's trade minister dismissed concerns of the deal opening up the country to China, also that the deal may favor one side or the other. Does that represent, do you think, a popular observation held by Chinese investors?
Well, the deal is a deal that comes in two levels. Some of the stipulations will be reviewed within 3 years' time, and these are stipulations that regard Chinese investment by state-owned enterprises and some of the areas you've mentioned before in the introduction, namely sugar, cotton and rice. These will be reviewed. So there are areas which haven't been covered by this one, but the focus of this agreement was really to achieve a practical breakthrough, and that has been done. And issues that have to come later have been postponed to a second stage in 3 years' time.
So looking into the future, how will China's slowdown affect Australia's growth?
Well, China's slowdown is a slowdown in overall economic growth and a slowdown in state-sponsored and state-managed investment. But it goes together with a growth in consumer markets. So where Australia is focusing now, and that has happened over the last 2 or 3 years, is away from exporting resources which go largely into investment, but focusing on the growing consumer market. So in fact, Australia could be focusing a growing market in China, even though the Chinese economy overall is slowing down.
We have time for one quick question. China, giving Australia investment rights, a yuan clearing bank. What is the significance of that?
Well, that will provide the basis to reduce costs for both sides. The clearing bank makes it superfluous to go through other currencies to exchange trade and investment. And the expectation is that will reduce cost and increase volumes in mutual investment and trade.
All right. Hendrischke in Sydney, thank you so much for your time and insight.